Yo guys, this is the voice of Mr. Solution. So on today's analysis, we'll be looking at perpetual futures. That's PEP, right? The name of the coin is Perpetual. And then we are training it on FTS futures. Of course, you know, my favorite exchange is FTS. And if you don't have an account yet, I encourage you to do that. Click on the link at the lower section of this video so that you can join us, also join our community of traders on Telegram. The link will also be left there. All right, so the coin Perpetual has actually been on the downtrend for a very long time. What we are seeing now is the daily chart of it. You can see it's actually been going down. Of course, the market generally is on the downtrend. The market is on the downtrend, but it seems as though there are some of the coins have already started their own downtrend even before the market plunged into the downward projection. So we have the daily chart and we need to focus on what is currently happening. We need to focus on the current price action. So we have this general chart here. Of course, this is called a bear pennant. This is a bear flag, not a pennant. Pennant and flags, they look almost the same, but they're not really the same. The shape and the way the direction they face, that's what actually differentiates the two of them. So this is actually a bear flag. But then, yeah, it's a bear flag, and of course, whenever we spot a bear flag, the main thing we normally know is that coins normally drop. But you can't just conclude, you can't just run with what textbooks say. Sometimes we see that there are exceptions to the rule. We see that sometimes these textbook definitions and all that, sometimes they don't hold water. So we need to focus more attention on what the chart is saying, because the chart doesn't lie. Yeah, the chart doesn't lie. So we have this flag here. You know, we have this, this is the support, this is the established basic support, and then this is the established basic resistance on the daily time frame. And then we have this is our major area of focus. This 1.390 is our major area of focus. So as we go down to the lower time frames, we get to know why we said it's the major area of focus. So understand that in the daily chart, we have a bear flag. But we can't conclude because you need to get your entry. You know where you're taking your know where you're taking your profit, and also where you should put your stop loss. So you can't get that from if you can't get that from the daily time frame. So you need to go down to other lower time frames to see what they are saying, and then you'll be better informed to take the best decision. So from the lower time frame, we move down to the 4-hour chart to see what the 4-hour is saying. So this is the 4-hour chart. Looking at the 4-hour, it creates something that we need to observe. It created what we call a trend inside a trend. Yes, that is what is called a trend inside a trend. It happens when an existing trend occurs, and then there is another trend forming inside of it. So that's what we have here. This is the macro trend. This the resistance, and then this support is the macro trend. This bigger channel, this is the bigger channel, is the macro trend. And then we have this white line that we see on the 4-hour. We have this white line that shows that another trend is existing. So we have this channel here, we have another channel here. So it has automatically created another channel inside another channel, right? So it goes to show that at a point, yes, we had this of course created a very big resistance, but there was a time when immediately the price got to this very upper channel. You know, of course, it met the resistance and started dropping, came back again, touched this low, went up again, though it couldn't quite get to the apex of that same place, but then it reversed. Okay, came back again, came to this very place. It couldn't break above it. Came down again, touched the bottom, came back again, the same level, couldn't break above it. Now came back again. Now at this point, it has actually broken it. So this movement has automatically created another trend. Okay, so for the 4-hour, we point this out. Okay, we see that there is actually this channel, and automatically it has created the zone. So we have this one here, we have this lower section, and we have this upper section, and then we have this lower section. This is actually what is happening now. So from the 4 hour, let's also go to the 1 hour chart to see what the 1 hour time frame is as well telling us. The 1 hour chart paints a more vivid picture. Okay, it makes the whole thing to look simpler, so to say. Now we have this on the 1 hour chart. We have this, the same channel I talked about. We have this, and it's a bit more simplified now. It's a bit more simplified. Now, this is an area, this very line here that shows 1.250. This is a very big area that we need to pay very close attention to. Why? Because so far at a time it served as a support. Remember that support and resistance are not points, rather they are zones. So if I'm using a thin line to identify, it doesn't really mean that it needs to be exactly there. It doesn't mean it needs to be exactly there. So that's why sometimes I normally use shaded regions, because support and resistance are not points, rather they are zones. But then just for the sake of explanation and for the sake of education, I decided to use just one thin line to point out that we have a support here, and so far at this point, this support we used to have is serving as a resistance. So we need to observe what is happening here. We need to observe how this chart plays out whenever, as it comes to this very point, so to say. We need to observe how it plays out, how it reacts and all that. So for the 1 hour, we can't really conclude. Okay, what we are doing now, is trying to get the best entry. We are trying to get the best entry and also to know where we will be taking our profit, because already we've known that this is a bear flag, and bear flags are bearish, but we can't just jump into it like that without getting the best entry and also know where we should be taking our profit. And remember this, I had pointed it out earlier. I said that this is the major resistance we have. Okay, so of course, this is a resistance, but this is the major one we need to contend with. This is the major resistance that matters. This is the major resistance that matters. So we have this channel here. We have this resistance, of course, here, which could turn into a support, so to say. Yeah, there's a likelihood of this very place turning into a support, because look at what happened there. At a point, it was serving as a resistance, and then getting to this very, that's as it got to this very point, it broke above it, and now it went back to this very resistance, and we have here, it went back, but did as if it wants to break above it, but couldn't break above it. Now the whole price action is happening within the second channel. Remember, I said we have already identified 2 channels, this one and then this one, but then we have the grand scheme. In the grand scheme of things, we have this major bear flag here. Okay, so the price action is currently on the second channel. Okay, so that's for the 1 hour. Then for us to get the major entry, we need to switch because what we are doing is day trading. So we need to go to the 15 minutes time frame, which gives us aptly the right place to take our entries and also know where we should be taking our profits. Okay, so let's switch to the 15 minutes time frame. Now the 15 minutes time frame gives us the minute information, the major detail of what is currently happening, right? Like I said, this area we need to pay close attention to it, because if you check very well, you see that this has been in a downtrend. Like it's been making a series of lower highs. It got to this very point. This is the next low. Now this is another low. So when you compare this and this, you discover that this is actually lower. Now, if you want to take an entry, you need to pay very close attention to how this candle closed, to how the chart closes here. You need to pay very good attention to it, especially this line I have drawn here. If this candle doesn't close above this very line, if it doesn't close above, and not just closing above it, it also needs to form another bullish candle, needs to form, because sometimes we see it where candles go above a given resistance but then fail to close it. Sometimes they even close above it, and then the next one that starts forming prints a rejection candle, and then it starts going down. So we need to see for us to take any long trade here, for you to go long on this trade, you need to see that this candle, okay, closes above not just this, but this very one, this purple line needs to close very well above. That's the only time you can take your end, you can take a long trade, remember. But in the event that it doesn't close above it, it means that the price is definitely going to come down. And actually, I think that's really what is happening now. You know, it tapped this very one, it tapped the resistance here, couldn't close above it, then rejected. The next one that formed couldn't even near it, couldn't get to touch it, and then now it's going down. Okay, so right now, if I'm to take this trade, I think I'd be shorting. And then shorting, where should I be looking at taking my profits and all that? I would be looking at taking profits from here. Okay, I would be taking profits here, and then finally here. Okay, so the question now arises, why am I stopping here? Because remember, what we have is a bear flag. So why am I stopping here? Why don't I still take profits lower? You also need to consider what happened previously. That this downsloping line now is actually a support. Now take into cognizance what happened. Let me remove this. Okay, let me remove that. Now take into cognizance what happened, when price touched these very areas. See, it touched it here, it went up. It didn't touch it here. It didn't touch it here. Touched it here again, it went up. So there is still a likelihood of this thing coming down to this very place, touching it and getting rejected. So what I would be doing, the ideal thing I would be doing would be to take my final profit here. I have 1, 2, 3, 4, 5. I could probably split it into maybe to take 20% here, take 20%, 20%, 20%, split the profit across board, right? So immediately it gets to this very place, I'll close on my trade, knowing that there's a tendency of this thing bouncing. So I need, if it eventually gets here, I need to see the price action. I need to see what happens. I need to see how the price reacts at this very point. It will not tell me whether to maybe re-enter again. Remember, I've already taken my profit and I've locked it. So what it means is that I'm entering a totally different. I'm entering a totally fresh trade. So I would need to close everything here, see how the price action reacts here. It might even give me a better entry. Okay, I could probably touch here, bounce, get to this very point, even get to this very point. So if I'm shorting here again now, and then if I'm shorting, of course, I will not just be stopping my profits here. I could definitely go lower. Okay, so that's actually how to take this trade. Now, the next question is, where do you place your support? You need to place your support a bit above this major resistance we have here, because if the price eventually closes above this very 1.390, remember this is supposed to be a zone and not a line, but I'm just using the line to make it to be a bit clear. Okay, so if price eventually closes above this very point, okay, it means that the bear flag we have has been invalidated, so price automatically needs to start going up. So I need to place my stop loss at the point of invalidation, where I know that if price eventually gets to, so nothing will stop it from going down, nothing will push it down again. In other words, it will start going up. So I need to put it at an invalidation point. That's why I do not put it there, because some persons have the habit of putting their stop loss at an area of value, at an AOV. It is very wrong, because it's pretty much possible for the price to touch there and reverse. Look at what happened there. Imagine putting your stop loss there, it touched it, although it went a little bit above, but what happened next? It reversed. So you don't put your stop loss at an AOV. Just give it a breathing space. Okay, give it a space to breathe, so that it can do what it wants to do, and then decide the direction it wants to take. Remember what I said. If you are to take this trade, if you're to take this short trade, you need to be very, very observant. You need to be very, very watchful to see what happened there. Because if you compare the risk to reward there, I don't know, but I think it's quite okay. Maybe we'll have 1 to 2 or something like that. But they need to be very, very careful. You need to see how this thing closes. If you close this above, you have no business shorting this. You have no business shorting this. If you eventually closes above this very purple line, you have no business shorting this. Rather, you should look for, keep your eyes on this next resistance, because definitely it's the next resistance. You need to keep your eyes there to see how it reacts, then you can get a better shorting opportunity. But so far, we've seen that it hasn't closed above it. So the best thing to do on this trade would be to short. Okay, the best thing would be to short, and of course, you keep locking your profits, keep taking your profit. So that's just what I wish to share with us this afternoon. I hope you've learned how to do such analysis when you spot it, and then till I come your way again, I remain your man, Mr. Solution.